Hi again. I just want to make this video really just to reinforce a few things that I was thinking over the weekend, and also run through the complete process of the chart analysis this morning. So one thing that I noticed at the weekend was running through Twitter accounts and various stuff was that you get all these so-called experienced traders, and a lot of them are great traders, but they're still flogging um, access to daily trading rooms and webinars and stuff like that. And I think it's really important to, whilst you got to learn and make your own mistakes, I'd like to mention at this point that one of the biggest mistakes I made personally was over reliance on other traders' methods, including my own. Like, I'm showing you something now, I'm showing it you totally for you to have another string to your bow, another option, and another thing that I think a lot of what I do is useful. It works for me, so there's no reason why it can't work for you. But if you're going to join another room, it's like having a crutch or stabilizers on your bike. You're never going to really develop your own method. So the point I'm trying to put across here with the stuff I do is that nothing is the best method. The only best method is the one that works for you, of course. And I want to show you something that works day in, day out. I live trade in the morning. The first trade of the day, that's generally my only trade of the day, unless I've done hours and hours of research and have been waiting for that perfect additional setup. If I'm just sitting here with itchy fingers, and this is as a result, you've got to do the itchy fingered screen time, if you like. And the best way to get round that is just take your live trades first thing, stick to your plan, grab your 7 or 8 pips. You might only want to do 1 or 2 trades a week. You might like to do, like I do, a trade every day, and then just switch over to a simulator, because that simulator will help you study and learn price action. More often than not, you'll find you'll enter a trade on the simulator and it'll fail, and you'll be glad you weren't in it. If it for some reason becomes more winning trades than losing, then that's when you have to sort of decide whether you're up to the job of taking 2 or 3 trades a day and improving your bottom line, your profitability. But my suggestion would be just develop your method system, whatever you want to call it, and then just take your most high probability setup trade, call it what you like, at the very first thing in the morning, or very first, the one trade of the day, whether it's the London Open, American Open, or sometimes I found it, well, not sometimes, but in the past I've found it very reliable to trade the end of the day. When you say, for example, get an H1 reversal, we know they're quite reliable. After the move that has hit the daily range, you're outside of the big boys trading time, say for example 7 or 8 in the evening in the UK. So you're getting a sort of grinding period when you could hypothetically say that they flick the algorithms on and the big boys have gone home. That's when you can get reasonable reversals. So you develop your trade time and your trade method however you like, but don't be too reliant on other people's methods. When I got into this, I wanted something that was reliable, would stand the test of time, and going back over 20 years, you can see charts that these trends, these little alerts, if you like, because they are trends after all, tell you, will get you in a trade in 1998 just as easy as 2016. So that's good enough for me. Develop a method, or I develop my method as a result of those things. Trend analysis, support and resistance, big round numbers, and it's never really changed. Just the finer points have changed. So, some interesting stuff from this morning. I was concerned with my first chart, that was the US CAD. Want to see what dollar's doing, not necessarily the correct pair to look at for dollar strength, American dollar strength, but or weakness, or sentiment, you could say. But it's a chart that I've traded in the past with quite a lot of reliability, so I'm quite happy to use that as one of my choices for the morning. Anyway, first thing I want to look for in a chart is a relatively low move that's happened already, compared to what the average daily range is for, say, any given period. This is over 10 days, 72, 64 over 4 days, and averages of 60 over 2 days. So that wasn't appealing to me. The other thing, by comparison, euro pound had about a 30 pip move at the point I was considering entering, so less than half of its daily range. So that appealed to me much more than the CAD, dollar CAD. Other thing to notice here, the other thing that's very important, I mentioned that while I'm at this juncture, is that I want to have seen an alert right on my, as near to my 6 a.m. trading day's start as possible, and that definitely wasn't the case in this currency pair. The move had happened, or the alert had happened at 2 or 3 hours before my 6 a.m. start, so that wasn't really anything that I was interested in trading. There was a 30-minute alert, again, quite a couple of 30-minute candles away from where I wanted to trade. Not really my cup of tea. The other thing concerning on this chart was this massive gap here. I don't trade gaps per se. I don't really understand properly the logic with gaps. It's just never interested me. The only thing I do know is that when there is a gap, I'm talking about the close of Friday here to the open of Monday here, the institutions, the hedge funds, whoever, will try to trade the close of the gap, because it happens on a reliable, regular basis, but it's still not enough rule-based trading. You could probably develop a plan. You could say, when you're this far away from there, if you get a trigger, trade it. That might well work. It's something I've never bothered looking at. Pound dollar, same thing, massive gap here, but no recent alert, so not really interesting to me. Euro dollar, massive gap here, same thing, we were in a downtrend, not really interesting to me. Aussie dollar, well, that was a difficult chart to study, and I don't like really trading the Aussie dollar because it's not, it's a bit slow. As you can see, it's been sideways for, this is a mess, absolute mess. Don't worry about those lines there, that's just me sort of getting into they were done this morning. All these charts are closed. There's no charts open on my platform on a Monday morning, never. I always start from clean charts every morning, close the chart, every chart down, and that way you get a fresh, in my opinion, a fresh view. By comparison, H1 on my euro pound was, in my opinion, exactly what I'm looking for. That's the rules. I'm looking for a recent alert which happened on the 5 o'clock candle. Then I expect it to potentially pull back. We know why, because an alert shows us some sort of resistance in a long alert has been broken, pull back to test resistance, and then look to enter the trade when everything else crosses the T's and dots the I's. Again, pound, yen, nothing, dollar, yen rather, nothing particularly interesting. No H1 alert where I wanted to consider trading. Didn't want to be trading at the height of this massive move upwards. Maybe from a pullback and an alert to the opposite direction, but that wasn't there. Pound yen, same thing, different currency pair. This one was concerning because whilst I did get the alert at the right time of day, in other words right on the 6 o'clock candle, so it wasn't the 5 o'clock candle like the euro yen, so again a euro pound, so again it wasn't a perfect setup. So that's it, that's the reason I took, I'm not sure what M30 looked like on this. Yeah, M30 had an alert there, so you could have drilled down and waited for a pullback on the M5 perhaps and could have considered going short, but it just didn't it didn't come at the right time. I want to be in that trade between 6 and 7. I don't want to be trading anything that's a really, unless I'm in the trade. I don't want to be entering a trade at 7 o'clock unless unless I'm really, really confident that the setup looks right. So let's just have a look at that, because I haven't studied that. So that was the conf down, and this was the pullback. So there was an entry there, but I didn't think there was enough room between a significant level to make, in other words, the 25 level that I use as a target, to make it worthwhile, considering you'd need 4 or 5 pips in further than that 25 level in order to get your profit, because of the way selling works. You've got to add the spread to your trade. So not in any way, shape or form as nice looking setup as the euro yen. So euro pound, I keep saying euro yen, don't know why, apologies for that. So that was the trade, as you know, and that's the reasons why. So hopefully I've covered everything I wanted to cover. Don't take what I say or other people say as read. Sit and teach yourself. Don't make a plan and trade the plan. My plan is live trade, that first trade of the day, and then demo trade anything else. That's why occasionally I will give you some later in the day demo charts, but it's not laziness, or it's not fear. It's just lack of greed and making a plan, which is a trade a day, and trading the plan. And if I've sat around for hours loving a setup, maybe from the higher time frame, maybe an H4, and then made a fantastic plan as a result of that. So for example, this H4 down here, we know these levels are fantastic, so or the alerts rather are. So I'd be looking, I'd say, right, I need a pullback, what do I do on that one? So I might well take a trade as a result of that. So here we have the H1 up, we've got the H1 down at this point here. So that is the only reason I may take an additional live trade, is if I've been watching it, studying it, but that's not what I do really. As I've said many times, I want to see the H1 at my time of day. The reasons for that I've made quite clear. It's the volatile time of day, it's when the big boys have got to make their bonuses, and it's the most comfortable time of day for me to be trading, because basically, apart from making videos now and the additional study which you will need to do, so you will tend to, in my opinion, want to spend 8 or 10 hours a day, 5 days a week for years, becoming comfortable with what you do. I'm just trying to hopefully reduce that time substantially for you by suggesting a comfortable regime and a working regime for you to have a go at, something for you to look at and hopefully learn a little from my mistakes. So that's it. Patience, discipline. If you need to trade, if you need to study, don't trade live, demo trade on any additional trades, and just build up your confidence. And once you start getting 8 out of 10 correct, then you can live trade as many times as you like during the day. But there really is no need. A trade is a commodity. A quality trade is just like going out and buying a bag of oranges and doubling the money and flogging those oranges. It's just about a job, really. Trading is a job. Thanks for watching. Have a great day.